Banking 2.0. How DeFi lending protocols will affect traditional lenders. Moderated by Andryunin and Alexey, Gotbit. With Matty Greenspan, QuantumEconomics.io. Kevin Murcko, CoinMetro. Alex Davis, Tezos Israel. And Oliver von Wolff, CO Labs and Crypto Oasis.
So we only have 15 minutes. We have no moderator, and we're missing a few panel guests. So we're gonna have a fireside chat. Yeah. We're just gonna wing it. So we're here talking about DeFi, how it's going to affect traditional banking, how maybe it's already affected traditional banking. I guess I can start out by just saying that, you know, when it comes to almost every innovation we've had so far, whether it be blockchain, crypto, DeFi, NFTs, most of these things start out quite gimmicky. They start out, you know, you don't really have a solid use case. Use cases are quite sparse. Eventually, traditional finance rolls in and takes the pieces that they like and starts to embed them in their own ecosystems. We've seen that already with things like ICOs, well, traditional fundraising, obviously, but also crowdfunding, licensed crowdfunding, et cetera, traditional markets starting to take hold of these concepts. I would say that in general, when it comes to DeFi, when it comes to most things in crypto, at the end of the day, traditional finance does a lot of these things already. One of the main aspects that DeFi or any other crypto-centric piece adds to the puzzle is that it gives access. Access to people that have never had access to these types of services before, and DeFi definitely is one of those pieces to the puzzle.
Yes, just want to welcome the rest of the people to this interesting fire talk. Our topic is today DeFi, as you already mentioned, and how to lenders. I think this is one of the most interesting topics because it affects more or less everyone in this room. Oh, wait, you can make it, So, because the revolution, what we have in the financial sector, what's going on, you're welcome.
I decided to be as on time as our panel.
Yeah, we try to moderate and to have a bit fun on the stage. So, it's really a topic who more or less everyone should be interested in because it gives the opportunity without banks, without any intermediaries, to lend and to borrow money via DeFi. So the technology we all know is blockchain-based, it's very secure as well, and I'm very happy now to make a short introduction. My name is Oliver von Wolff, and I'm co-founder from Crypto Oasis, a managing director of CO Labs, and we have been built up the biggest eco and blockchain system here for in the GCC region with over 250 companies. And DeFi is one of our, let's say, also one of our section in which we're looking for. But now I would say the third guy, your partner.
Have you been introduced yet?
I haven't introduced myself, but go ahead and introduce yourself and we'll come back this way.
All right, my name is Alex Davis. I'm the Chief of Innovation at Tezos Israel, a grantee of the Tezos Foundation to build to push Tezos technology within the Israeli high-tech ecosystem. And I also founded a DAO-based banking protocol on Tezos called Maverick Finance.
Very cool. So my name is Kevin Murcko. I'm CEO of a company called CoinMetro. It's a Talon-based in Estonia exchange. Also have a company called Ignium, which tokenizes debt and equity, also based in Estonia. And my background comes from traditional finance, Forex mainly, Forex trading of currencies for about 22 years. I have a question for the audience, seeing as we're not going, this is not a panel, so we have no moderator. So question to you guys, anybody know what a back-to-back loan is? Back-to-back loan. Nobody? So that's...
No, wait, she knows it. She put it, no?
No?
Oh, okay,
sorry. So a back-to-back loan is the traditional version of DeFi. So what a back-to-back loan is, you take an amount of capital, you get that capital loaned to you from a country with a very small interest rate, and then you take that capital and collateralize it and loan money out at a much higher interest rate, and then you hedge your FX risk between the two loans. That's been going on in traditional finance for 40 years. So I say that because in general, what happens in DeFi already happens in traditional finance. Again, the main caveat here is access. And we haven't completely solved the access question simply because most people in the world, population-wise, don't have a cell phone, don't have a smartphone, don't have an internet connection. So while we're solving some of the access issues, we haven't solved them all. I think from the banking sector, DeFi is interesting because they now see it as somewhat of a threat. Before they see it as a threat, it won't become interesting to them. When it becomes interesting, we as a collective body here need to make sure when they adopt these type of DeFi principles that one, they keep them decentralized. Two, that when they keep them decentralized, they still maintain some type of, let's say, continuity within the networks they use so that security is still maintained. Because traditional finance has a great way of taking really cool concepts and destroying them.
Yes. I mean, around 80% of people under 24 years have made bad or fraud experience in the internet. So I suggest the percentage in DeFi is quite high as well. And you see, it's an ecosystem who's growing. So how to build a trustful ecosystem who everybody can believe and trust in. I think one part would be to let's say the DNA of the technology. It means the algorithms, it means the framework, it means the structure, also software and the hardware part. And the second part is to include as much as possible civil society. I think is very important, and then also like governmental and as well like corporate institutions or universities as well. Yeah, I think this is very important.
Well, when you talk about being, like the vast majority of people not having cell phones or access, and opening up that access to billions, really. Even in the United States, something like 33% of Americans are underbanked, and even around 20-ish something percent don't have a bank account. We're talking about what is perceived to be the leading first world country in the world. And so if you think about that, that is just the United States. Now imagine, Russia, China, all of South America, all of Africa. I don't know the numbers on Europe specifically, but that access and even remaining decentralized, even when you do have access, now we've got KYC AML, which is the most biggest fraud that has ever come into banking. The biggest failure and fraud. It costs us $50 billion a year and it's terribly unsuccessful, 99.9% failure rate. And so this access is not just about giving people the ability to take control of their finances, but also the ability to stop having these, how do I put this? Like, we now need consumer protections from the government and from banks. And that's what DeFi is really bringing to people.
Yeah, I agree. I mean, also you have to consider how many people got excluded of our economy system over the last 20 to 30 years. So what people need in emergency countries is access to internet and as well access to a wallet, and then finally they can start being a part of the world economy chain. I think that's a very important part. What we as, especially like Crypto Oasis, what we're trying to supply with the ecosystem, what we're building, yeah.
I think there's a I don't know who said this. I'll just say I said it, but it's much easier to change something from the inside than the outside. So I think part of this, and I agree with all the comments that have been made. Definitely, there's a lot of people locked out. I think underbanked is a phrase that not many people use. You hear a lot of non-banked or not banked, but everybody's underbanked, in my opinion. To be honest, I don't care what your bank is. You probably have never had a good conversation with them. And they probably don't offer all the services you need or at the price you want, et cetera. So everybody's underbanked. But this idea that DeFi, because it's decentralized, is somehow going to change the way the world works is right, and it's wrong. It's right because it can change. Decentralization itself is quite powerful. However, we do have this thing called regulation, which I'm sure everybody in this room loves and writes dissertations about, and et cetera, and has pillow talk with their wife and husband at night about. But regulation needs to be changed from the inside. And at the initial push for DeFi, there was a lot about crypto anarchism, about trying to push away from KYC and all these things. And while I agree that KYC doesn't work, I don't know anybody who could probably argue that it does, maybe a compliance officer somewhere, but it doesn't work. However, in order to make the change so that we can radically adjust the system, we need to make that change from the inside. which means, again, everybody in this building that's trying to push towards this decentralized future needs to get into a room with people that can actually effectuate that change. And, you know, unfortunately, the industry itself can't do it. So I'm definitely one for people that want to get on a soapbox and talk to the regulators, talk to the legislators, talk to, you know, get in touch with government. Dubai is a great example of how quick a government can act, especially when they see that it's in their best interest.
Yeah, I think a lot of people also are excluded from the investment products because they don't have a bank account, but they can have a wallet and they can invest over DeFi and can participate. If you just look to Europe over the last 20 years, Europe savers, they lost around 30% of their value, yeah, because they had the zero interest policy of the Central Bank of Europe, yeah. But with DeFi, they were still able to generate like between 15 to 20, 25% per year. So people who are excluded, they can just not participate in it. And that means DeFi gives back the power to the smaller people as well. I'm not a revolution guy, just to make this clear.
Well, it's interesting because DeFi, there is no judgmental factor to who you are in order to access anything on DeFi. And it's made everything around the world become more streamlined. I mean, we have developers on 3 different continents for Maverick Finance, and not a single dollar has gone through a bank. And so, I mean, if you could think about, you know, what type of access you give to the world to actually free up money, the ability to provide financial services for billions is really on the table. And when it comes to, you know, government regulation, good luck, you know, regulating a DAO that's sufficiently decentralized. I think that's one where we are inherently 2 separate fields of DeFi, right? Because, you know, CoinMetro is a regulated fiat on-ramp exchange, and Maverick is through and through from every part. The moment that we launch, we do not control. Like, the DAO must vote on even down to the treasury funds. So when it comes to being on the inside, it's wonderful and it's great, and people are actually going and moving and doing that. It's why I've sat down with regulators in different countries. However, if you can build something on the outside and get big enough, they cannot ignore you, nor can they actually regulate something that is sufficiently...
They bring you inside, essentially.
Yeah, they're going to, in a form, basically turn DAOs into digital credit unions. So there will be some form of regulation the DAO must enact, otherwise you can't, you know, transact on a fiat on-ramp. But for now, most regulators can't even wrap their heads around anything.
Yeah, I think, you know, banks in general are considered to be gatekeepers in traditional finance, right? So they're the ones that take the documentation, and once you get through the bank, you're inside of the financial ecosystem. If you can't get into a bank, you don't get into the financial ecosystem. And obviously DeFi revolutionizes that concept in that you don't need to have the bank. There is no centralized authority that's going to tell you whether or not you can gain access to a product, which is fantastic. And I'm definitely not against that in any way, shape, or form. But yeah, on my side of the business, you're right. So we are a centralized exchange. We are regulated, highly regulated in multiple countries. And so, you know, trying to explicitly describe why DeFi can actually be safer than the current environment, the regulated environment, is actually a very difficult thing to do. But it's actually the truth. You know, the regulated financial ecosystem, traditional finance, is built on trust, if you would. That sounds crazy, but that's what it's built on. It's that these trusted counterparties are somehow going to make sure that a transaction goes through, but those trusted counterparties aren't trustworthy. So at the end of the day, you know, these concepts like DeFi just don't enter the brain of most people in traditional finance, most regulators, most legislators. So I think working together, where we're kind of on the inside trying to let them know that these things function, and banks are very interested in DeFi. They're interested in it because they know that it's the next frontier. They want to find a way to maybe make a hybrid model. And I think what we're going to see over the next probably 3 to 5 years is hybrid DeFi. So I wouldn't call that CeFi. I wouldn't necessarily call it DeFi, but where certain pieces of an ecosystem are going to be decentralized, like settlement. Settlement sucks, guys. If you've ever bought like securities in another country and it takes like 17 days to settle. So decentralized settlement is a thing. It's already being used in traditional finance, but centralized, let's say, collateral, et cetera, is probably where they're going to go. Centralized collateral engines, and decentralized settlement.
Yeah, I mean, the banks, they are highly regulated, so they will need regulated products. Of sure, it's coming, yeah. Regulation is about, in my opinion, also to protect customers yeah, and lenders and borrowers on both sides. So we need a part of regulation. And I'm sure we will see in the next, let's say, 5 years that we're getting more regulated products on the market in the DeFi space, in the crypto space, because even we maybe talk not so good about banks. They are still needed in the future, yeah, but the bank of the future will look completely different as the bank looks today.
Well, I think on one hand, you said that consumers need protection, but I think we've gotten to the point where the consumer needs protection now from the banks. If you think about banks, and Kevin used a great word for this, gatekeepers. Banks are essentially the bouncer outside of the club, making sure you don't get in if you're like, your suit's not expensive enough. But the consumers, if you think about banks as governments, and you see this all the time when a government becomes too tyrannical, you see a violent uprising against that government. And DeFi is essentially this, in a sense, not violent in a kinetic sense, but this violent uprising against tyranny. And that's literally why we called it Maverick Finance, because you can go off and be on your own, and you don't have to fall into this, like, there's a long story behind it, we're out of time. But the time for consumer protection is from banks. And the SEC should go and do its job against going after crooks rather than going after people who are building legitimate products. That's the real consumer protection, and we don't have that today.
Great way to end it, I think.
Yeah, I just want to say we have a couple seconds more, so everyone maybe want to say a last sentence. We start with you.
Kevin, go. I just said something.
Yeah, okay.
So.
Well, I think he ended very well, just saying that kind of DeFi in general is revolutionary. And I do think that the bank of the future is not going to look anything like the current, what we call a bank. I hope the word bank doesn't even exist. I don't know what they'll call themselves, but I don't think it's going to be a bank, or at least not as we understand them.
Yeah, I also think in 3 to 8 years, DeFi will be an essential part of the financial industry. How this will look like, I don't know, because I do not make the regulation, but definitely it will change.
Thank
you
everybody.
very much.
Thank you
for the last minutes today.